The snap judgment fools, well, guess what? They lost again. All the major banks reported earnings this morning, and with the exception of Citigroup, they were initially pummeled. Sell. Sellers panicked out of Bank of America, out of JP Morgan, and they stampeded out of Wells Fargo. But once their conference calls got going, the stocks all roared higher, in some cases dramatically, especially Cramer fave Wells Fargo, contributing to the broader comeback in the averages, with the Dow only gaining 113 points, S&P advancing 0.4%, and the NASDAQ, the home of all the stuff that was getting crushed, up another 0.71%. This rebound for the banks reminds us that earnings season is a time of incredible treachery. Looks like nobody listened to my Jeremiads. I love that SAT word. Earlier this week about not jumping the gun. Every quarter I make the same argument about how you should wait and do more work before you pull the trigger. But a lot of people remain unconvinced, and I know why. Because they be stupid. Why did these highly important bank stocks turn around after being pummeled at the opening? I'll tell you why. Very simple. Things turned out to be better than expected, and much better than certainly that the bears were thinking. Like I've been saying for ages, the banks are making a ton of money thanks to the Fed rate hikes, even without any capital markets activity. And the loan losses aren't that bad. Once the conference calls happened, anyone who bothered to do even an ounce of a jigger of homework, because I used to own a bar, realized that the consumer's alive and well, just slightly a little more cautious, which is exactly what the Fed's aiming for. If we can get less spending, a little more saving, less inflation, utterly wrecking the economy, that's terrific for the stock market, for you and me, for our portfolios, because it means the end of the tightening cycle is in sight. The bias, the ridiculous bias to sell the bank stocks before hearing anything was dead wrong. As has been the case since 2023 got rolling. Will this era of good feelings hold up through next week? Well, then you know what we have to do. We have to go through our game plan to find out. Yes, because this is the heart of earnings season really beginning. Today was kind of just more of a kickoff. On Monday, we have Martin Luther King Day, so the market's closed. Tuesday, full swing, when both Goldman Sachs and Morgan Stanley report. Now, we had a press report preview of a potential weakness at Goldman. They tried to get on this mass consumer banking business. I told them not to, mainly credit cards. That's apparently starting to cost them a lot of money. That said, if Goldman could put up good numbers, and we now know all the negatives because of this story that ran, well, I got to tell you something, then it could be it could be rocket fuel. It could rocket higher. It's only selling at 10 times earnings, and these are highly depressed earnings. No way the investment banking business stays bad forever. Eventually, we'll get mergers, although not necessarily with this crew at the FTC. And we'll get IPOs, and that just has to happen because there's so many stacked up. And Goldman will once again, as it did when I worked there, be printing money.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.